Hello everyone and welcome back to the channel. Today I will review Topicus.com, which is one of the stocks that you requested me to review. Topicus is the mini Constellation software with much higher growth potential, more runaway, and a larger software market in Europe to expand into. They have a $12 billion market cap and the stock price is down 28% from its recent all-time highs due to concerns about AI taking over software companies and also the drama with Mark Leonard leaving the Constellation. One of the software companies acquired by Constellation in 2014 was a Dutch company, Total Specific Solutions or TSS Operating Group. This small Dutch company was acquiring niche software businesses in Netherlands, and Constellation reached an agreement to acquire them and add them to their portfolio in 2014. 6 years later, in 2020, Constellation decided to combine its TSS operating group with another Dutch company, Topicus.com, that was also operated in Netherlands to form a new operating group. Mark Leonard then decided to spin off this new operating group as a standalone company called Topicus. The current CEO of Topicus.com is Robin van Poelje, who is the founder of Total Specific Solution or TSS, and he basically shares the same principles and philosophy as Mark Leonard, the CEO of Constellation Software. They were doing the same thing that Mark Leonard did in North America in Netherlands for years. Robin has been with Constellation since January 2014 when Constellation acquired TSS, and in 2020 he became CEO of the new operating company Topicus.com. Topicus now has three main operating groups: TSS Public, TSS Blue, and Topicus. TSS manages the acquired businesses, applying best practices to improve the cash flow, and Topicus is executing the exact same playbook that made Constellation one of the greatest Canadian stocks of all time, but with a dedicated European focus. Today, I'm doing a deep dive into Topicus, their unique VMS model, their incredible financials, and whether the current valuation is justified. Let's get into it. First, what exactly is Topicus and what they are doing? The easiest way to think about it is Constellation Software's European clone. The business model is simple, repeatable, and highly effective. Acquire, manage, and build. They acquire small niche vertical market software or VMS companies in over 40 different markets across Europe. Think of a software for Italian dentists or Spanish accounting firms. So why they focus on VMS or vertical market softwares? The answer is high switching costs. Once a small business is running its core operations on a piece of software, they almost never switch. This creates an incredible economic moat for the company and specifically for Topicus and Constellation Software. The key to their compounding machine is decentralization. They let the original founder and managers run the company, but give them capital allocation tools of a giant company like Constellation Software. So what makes Topicus in particular stand out is its consistent ability to combine organic growth with smart acquisitions. Their VMS businesses actually have higher organic growth rates compared to Constellation Software VMS businesses, and that's one of the main differentiation factors between the two businesses, as Topicus is also focused on more organic revenue growth. Its business model thrives on recurring high margin revenue, and the company has proven that it can deploy capital efficiently and scale without sacrificing profitability. So, how is that model translate to the numbers? Let's look at Yara IQ historical charts. They grew their revenue consistently at 20% CAGR rate. Their operating cash flow is also growing rapidly at 23% CAGR rate, and their free cash flow grows at the same rate of 23% annually. Quarter over quarter, the chart seems choppy, but this is because one of the main growth drivers of Topicus is acquisitions. And a big acquisition or a couple of small ones usually happen in just one quarter, and that's why we see this massive variation between different quarters. But when you look at it annually, we see a consistent growth towards upside. The company has a 32% return on equity, which demonstrates how great this company is at deploying capital and make a profit on it. With 32% return on equity and high growth rate of cash flows, Topicus deserves to trade at a premium. And it is trading for a premium valuation. Its price to earnings ratio is around 57 and its forward price to earning is 33. But this is not the best metric to look at for a company like Topicus, which does a lot of acquisitions. So the most important metric is price to operating cash flow, which is around 32, and its price to free cash flow is also 33. Still, 32 and 33 times cash flow is not cheap. This isn't cheap. But as I mentioned, 32% return on equity and high growth rates may make this reasonable. Investors are willing to pay for the certainty of a Constellation software playbook being executed in a massive fragmented European market, which is even more segmented than US market. Topicus is earlier in its life cycle than its parent company, giving it a much longer runway for growth and potentially higher returns on invested capital. Okay, let me look at historical values for price to operating cash flow of Topicus. As you can see here in this chart, the average price to operating cash flow of Topicus in recent years was around 35. Anytime the stock was trading close to 30 times operating cash flow, historically it's been a good time to pick up Topicus shares. And it is currently trades at 32 times operating cash flow. So based on this chart, it seems we are close to have a good buying opportunity with Topicus. Now, let me use YARA-IQ discounted cash flow calculator to see what is the fair value I can pay for Topicus.com. And by the way, this website that you can see, YARA-IQ.com, it will be released on October 22nd. So if you want to basically take advantage of a 20% discount on the first year of subscription, early access to this software, you can follow the link in the description box of the video and pre-register to take advantage of this offer. Okay, to start building the model, I imported a series of general parameters from YARA-IQ Stock Analyzer into discounted cash flow calculator, like the current share price, their revenue, their number of shares, their net debt, and their free cash flow per share. I also put my expected rate of return to be 12% for this stock to give myself some margin of safety. Now, in this model, I will calculate the fair value of the stock by projecting their future cash flow and then discount the terminal value and future cash flows minus the liabilities of the company back into the present value of the stock based on 3 different scenarios. In the bear case, or the most negative case for the stock, the business will have a little bit of margin compression. I considered 0% share-based compensation and 0% share dilution, and I assume the revenue will grow slower at 18% in the short term, 14% in the midterm, and eventually by only 10% in the long term. And I considered a terminal multiple of 26, which is much lower than the current multiple of the stock. For base case or normal case, I considered a little bit better margins, a normal revenue growth in line with analysts' expectation of 22% in the short term and 18% in the long term, and a terminal multiple of 30, which is in line with the current multiple of the stock. Finally, in the bull case or best possible outcome, I considered a little bit profit margin expansion, a 25% short-term, 22% midterm, and 19% long-term growth, and a terminal multiple of 34, which is a bit higher than the current multiple of the stock. Now, if I hit calculate, the software will give me some valuable information about the stock based on my assumptions. It gives you the intrinsic value of the stock for each scenario, which ranges from $100 in the bear case to $216 in the bull case. And then it will provide you with a fair value estimate, which is 162 Canadian dollar per share for Topicus.com. And comparing to the current share price of $143, Topicus is trades at almost 13% discount today. It is basically a buy based on the assumptions we put in the software. The main question is, how much more runaway does Topicus has? The biggest news of 2025 so far for Topicus is Asseco Poland deal. Topicus is acquired a 14.8% stake in Asseco, a major Polish software company, for a total consideration of over 168 million euros. It's obvious that Topicus is moving to larger, more strategic investments in Central Europe, dramatically expanding its acquisition runway. Ultimately, I think Topicus is slightly undervalued at this price. It is not an obvious buy, but it is trading at a range that I'm comfortable buying the stock. By buying Topicus, you're betting on the long-term decentralized European version of the most successful software holding company ever. If they can continue to deploy their significant free cash flow into their accretive acquisitions across the fragmented European VMS market, this stock has all the ingredients to be a multi-bagger over the next decade. Thank you for watching. If you found this analysis helpful, make sure to subscribe to see more similar videos. I will be back with another deep dive soon, but until that time, I see you guys in the next video. Farewell.